Today's show is sponsored by Franklin Templeton and their ETF platform. Ben, you know what's so hot right now?
What's so hot right now?
Yields, income, cash flows. Franklin has an income-focused ETF. The ticker is INCM. It's a diversified portfolio of equity and debt securities seeking to maximize income over a full market cycle.
Okay, so we're looking at dividend stocks, convertibles, secured and unsecured bonds, senior floating rate notes, mortgage-backed securities, debentures, and short-term instruments. There's a lot of access to instruments in the fixed income market, huh?
I've got a take later in the show on rates. Something's on my mind.
So Franklin says the fund may hold up to 30% of its assets in equity-linked notes and 25% in junk bonds. 25% could also be in foreign issuers. So this is obviously a very diversified fund. To learn more, go to franklintempleton.com.
Welcome to Animal Spirits with Michael and Ben. For the second week in a row, unfortunately, we're starting off with a bit of a eulogy. Yesterday, the legendary, I was about to call him a broadcaster, but he's so much more than that, social activist, champion at the college and professional level in basketball, Bill Walton was easily my favorite broadcaster of all time, and it's not even close. So I was very saddened to hear of his passing yesterday. And for those of you who don't know who Bill Walton is, just universally loved, right? He was a 7-footer who would go to Grateful Dead concerts and be head and shoulders above everybody else. He was really, really one of a kind. I want to play just a quick 30-second soundbite from an interview that he did with Big Cat at Barstool Sports, just to give you a little taste of the legend that was Bill Walton.
When you go off in the middle of the broadcast, do you ever get lost in your own mind and you like almost forget where you are?
I get lost all the time, and
it's unbelievable to listen to. Like people love to listen to it. It's late night on the East Coast.
It's fun to get lost, and it's important to get lost. But getting lost, that implies that I know where I am to begin with, and that's a giant leap of faith right there.
All right,
man. And you are wearing a throwback Bill Walton Blazers jersey.
Yeah, I love this guy when I was going to say a little boy, but I don't remember when he came on the air, but I do distinctly remember listening to him in the late 90s, or I guess early 2000s with the Kobe Shaq Lakers. And I remember one time, like there's just so many sound bites that he had that stuck with me over 20 years later. One time he was describing Tim Duncan, who's the greatest power forward of all time, scored a basket over Robert Horry. And Robert Horry was a nice player, a fine player. And he was shocked that Tim Duncan, and this is a quote that he said, absolutely schooling one of the greatest defensive players of this era in Robert Horry. And Robert Horry was no such thing. Just yes. he was a poet on the microphone.
Yeah, he was really good. He did college basketball too for a while. He was.
I even think he did baseball, and he knew nothing about baseball.
One of a kind personality.
Absolutely, yeah, true. Like people use this term often, a one of one, but he really, really was a one of one. So, gone way too soon. 71 years old. Rest in peace, Bill Walton. You were absolutely the best. All right, Ben. What's going on in the stock market?
Washington Post shows that the stock market is now being driven more by tech. This is kind of funny because it's showing 2023, the Mag 7 was like 60% of the returns. And now it's only like 50%.
What do you mean more? More now than last year?
Yes.
What? That's hard to believe.
Good chart here. But it's funny because it's still driving like 50% of the returns instead of 60. Okay. So it's showing it's brought it out a little bit. But now I looked. Mid-cap stocks are up like 8% this year. The S&P is up 12. I don't know what small cap stocks are doing. So it's broadening out a little. Anyway, I just thought this was a pretty good chart.
I apologize. I misheard you. It's being driven by more than just tech now.
Yes.
I thought you meant it was being driven more by tech today than it was a year ago. Okay.
So the S&P 500 is broadening out a little bit, but it's just funny to think that like broadening out means it's still 50% of the return. So it's still just a massive. And I'm guessing, I don't know what the majority is NVIDIA still.
Well, anytime we talk about this, we have to just constantly point out the fact that the majority of the earnings are being driven by these stocks. So It's not it's not insane multiple expansion that's driving it. It's not just like investors' enthusiasm. It's fundamentals.
So you know what Nvidia is up this year so far?
Over 100%?
Yeah, it's 115% after being up 240% last year. Josh slacked us after the earnings last week and said, we're never going to see another company like this again. And I retorted that we're in the last 10 or 15 years, we've probably had 5 like complete all-timer companies / stocks that just we've never seen anything like this before. I'd say you could say,
what else?
Well, it's Nvidia. It's all the big ones, isn't it? That
We've seen that before. The Cisco in the late 90s had runs like the Mag 7 that we're seeing today, for sure. Nothing like Nvidia.
This obviously, as the stock market gets bigger, these companies get bigger. But we're talking these $6 trillion market cap companies. The fact that they're doing it at this size and scale is just what's so impressive to me.
But I think the difference between Nvidia and everything else is that this sort of came out of nowhere. I mean, that's ridiculous, but you know what I mean. This was a $400 billion market cap 2 years ago, 3 years ago, and now it's over $2 trillion. Like, these sort of moves don't happen. Bespoke actually had a great chart on this showing the rolling 10-year returns of Nvidia versus the other Mag 7, and this blows them out of the water.
So I guess you're right. So Apple's was more of a long thing. Apple held it up for a long period of time.
Sustained
Nvidia's
dominance
is just compressed.
So the Mag 7 have had sustained dominance for over a decade now. In some cases, much longer than that. But Nvidia, so it's up another 5% this morning. It's just, it is wild.
5 years ago, this was an $80 billion company. Today, it's $2.8 trillion.
Yeah, so I'm talking about this tonight with Josh on what are your thoughts. This sounds like so, I don't know, this sounds dumb, just comparing market cap and saying this doesn't make sense. But, right? Like, that's never like a winning argument. However, does it make sense to you? Does this sound right? Like, one of these has to be wrong. Nvidia is $2.75 trillion and Amazon is $1.9 trillion.
It does make sense to me, though, because of the
you think it makes sense that Nvidia is worth $900 billion more than Amazon?
In terms of people projecting to the future of what AI could be, I think you're getting that sort of premium. Obviously, again, but it's the kind of company that it could drop 30% in a month and it wouldn't because of one small miss, because that much of stuff is baked in.
So I know what's happening. I understand why it's doing what it's doing. But you think this makes sense to you?
I don't know. To your point of comparing them, it's hard to say.
It's not. So, yeah, I mean, again, this is these are dumb games to play, but Nvidia was worth $900 billion all the way back in May of 2023.
I don't know. I look at the market caps of meme coins in crypto, and then
my point is Nvidia was $900 billion or $800 billion in May of 2023. It's up 3.5x in a year. And $800 billion is not a small number to begin with.
Okay, so I think about it more in terms of like a company like JP Morgan, which has a market cap of, little less than $600 billion. All
right, so that makes sense to you that Nvidia is worth more than JP Morgan?
I'm saying, does that make sense? If thinking, again, financials are more of a slower moving kind of thing.
No, I know. Just looking at market cap is dumb. I get it. But the more that Nvidia just continues to go vertical, and I don't think I've ever said over this entire run that like Nvidia is going to take down the market, just wait. Like, that's not my shtick. But to see a company add $700 billion in market cap in a month. It was $2 trillion. Remember that pullback a couple of weeks ago? So a couple of weeks ago, the pullback in Nvidia took it all the way down to $1.8 trillion. So it's added $1 trillion in about 5 weeks. So I'm sorry, call me crazy, but when I see moves like that, like, I do get a little bit nervous that this is getting out of hand. And it matters a lot. This company matters a lot to the psychology of the market, because the market, it's not being propped up, because that sounds like it's like a house of cards, but the market is being driven by enthusiasm with AI. And listen, they've earned it, right? They continue to blow it out. So it's not, investors aren't, I'm not saying people are crazy or dumb or anything like that, but just moves of this nature, when they start to go straight up into the sky, don't love to see that. That's all.
I agree. But this is the reason that this is not the dot-com bubble, though, is that they're actually backing it up with the results. That's the crazy thing.
Yeah, the superlatives are endless. I think they were guiding towards 71% gross profit margins, which is hilarious to begin with, and they came in at 79%.
So the interesting thing this year, too, is that getting back to the non-tech things, the S&P and NASDAQ 100 are basically up the exact same amount this year. They're both up 12%. I guess I would have assumed the NASDAQ 100 would be up a lot more.
I would have too. Lastly, as gaps get filled, core guy, that's like one of my core principles is gaps gets filled. This gap at 960, whatever it is, that's getting filled. I don't know when. It's getting filled.
Okay. I still don't understand this one, but I'm just going to let you have it.
I can't let you get away with that. This is very simple. For people who are like Ben, who don't know what I'm talking about, a gap is created when the stock opens up significantly higher than the last price. So it closes at 960. I'm making this up. It opens up at 1050. That's a gap. And that gap will get filled with the price coming back to the gap at, in this case, 960 or whatever it was. Got it?
I kind of get it. That's just weird to have as one of your life principles, though.
It's not an investment principle. It's a life principle.
Okay.
Like if somebody has a great thing happen to them in their life and they gap higher, they're coming back down to earth. It's just a matter of time. Gravity.
U.S. stock ownership at the highest level since pre-2008 crisis days. So we're up to 62% of Americans own stock in some form. It got as low as about 50% by end of great financial crisis times, and it's been slowly moving up since. And it was basically this level from the late 90s through the great financial crisis. And then you had this dip period where it went down and then it kind of come back up. The vast majority of upper income Americans whose household incomes are 100% or more, 100,000 or more own stocks. That's 87%. 25% of lower income Americans, people with less than $40,000. 2/3 of middle income Americans, 65% are own stocks. So this is basically on par now with home ownership rates, right? So we're talking 2/3 of people own stocks or a house. And this is one of the reasons that net worth for so many people is doing so much better. So if you're in that 2/3, you're in a pretty good, if you're both of those 2/3, right? If we did a Chris Venn diagram, I own a house, I own stocks, you're doing pretty good for yourself, right? It's the people who are in that 1/3 who are looking at this and going, oh my gosh.
Speaking of comparing numbers that have nothing to do with one another, do you think it makes sense that these numbers are the same? Like, do we as Americans make too much of the idea of home ownership? That sounds crazy. That 2/3 of Americans own a home. I'm not saying it's a bad thing. It's a lot.
I don't, right or wrong, we've decided that home ownership and stock or stock prices and homes going up in value is something that that's a life principle. That's a gap filled for America.
Well, it makes sense because I think that from a long-term wealth building lens, it's much easier for the average American to build wealth in their home than it is in the stock market. Because the average person doesn't know anything about the stock market and might have the tendency to do something that they shouldn't do, right? Sell in a bear market, get scared, panic, right? Because they get mark to market every day. The great thing about the home is it's for savings. So,
but I think that we've made it
recession
easier.
bear market, you're still putting it away.
Yes, and I'm going to get to that in a little bit, the ebbs and flows of those cycles. But I think we've made it so much easier for people to own stocks in index funds and target date funds and such in their 401k that there is probably less freaking out that goes on. I mean, there's obviously some, because if you're just looking at this chart of ownership going from 60% to 50%, that those 10% of people who sold out of stocks in one of the best opportunities to buy stocks in history, those people screwed themselves.
We're going to talk.
But most people stayed the course.
We're going to talk a lot. You're right. We're going to talk a lot about surveys today. And one of the reasons why I like this particular survey is it's asking a very direct question. Not do you think, not how do you feel.
Yeah. Or how do you think other people feel.
Yeah, this is do you own stocks? It's a very simple yes or no question. So we're not survey people. This is a survey I can get behind.
All right. So the next one is like, what's the best investment? And the highest number. So it's real estate, gold.
Looking?
Huh?
Can I guess?
Oh yeah. So it's real estate, gold, stocks, savings accounts, bonds, or crypto. No, I'm saying those are the. So what's the highest?
I would have guessed real estate.
Yeah, real estate is number 1. It's come down a little bit. That's 36%. Stocks were second place, actually behind gold, and now stocks are in second
So
place.
it's real estate, gold, stocks?
Real estate, stocks, gold, but it was gold for a while there. And they added crypto here, which is still a small amount, but that's a new one. All right. I want to get into this one, and you wrote a good blog post on this, speaking of surveys and why we don't like them. Before we get into the numbers here, there's always math-inclined people who tell us about surveys like, hey, don't you understand sampling? And this is how it's supposed to work. It's like, that's not our problem with surveys. Our problem with surveys are the psychology behind it. So there was a story in The Guardian. The majority of Americans wrongly believe U.S. is in a recession and mostly blame Biden. 55% believe the economy is shrinking. 56% believe the U.S. is experiencing a recession. 49% believe the stock market is down this year. And then 49% believe that the unemployment rate is at a 50-year high. And this one made the rounds on social media. Everyone dunked on it. Geez, Americans are so stupid. The stock market is up. The economy is doing fine. Unemployment rate is at a 50-year low. People don't understand anything. Blame this on the media or social media, or just people are just naive and dumb and political. And these are the things that people have been saying about this survey. And you came out with a blog post, and you called me. You said, this isn't it. This people are missing something here, because there's no way people actually believe this stuff.
Yeah, I genuinely don't believe it.
And
so
your point was like, this was an outrage bait,
yeah.
right? They massage this to look like people are stupid.
Yeah. All right, so here's the deal. People say that the media is doing this because they're in a click for business, right? The more outrage they can generate, the more they get paid. And that's true. The part that people are missing is that they're giving us what we want, what they know will go viral, and what they know will go viral is shocking negativity. So, Ben, you said earlier that people will tell us that we don't understand math with surveys, that you only need to sample it so many people to get an accurate representation. What they're missing is it's the language of the survey, which we don't see. We don't see the questions. Now, The Guardian paid, I think Harris is a company, to do this poll. Listen, I didn't see the questions, so maybe I'm wrong here, but I don't think I am. I think that The Guardian could have. I'm not saying that they did, but I think that the questions were worded in such a way that they could have written the article before they even got the results, because they were leading people to answer the way that they wanted them to answer. So, for example,
yes, like in a court movie, leading the witness.
Exactly.
Objection.
49% believe that the unemployment is at a 50-year high. There's no way that half of people think that. How about this? If you ask the question this way, ask 10 people, do you think the unemployment rate is higher today than during the great financial crisis? How many people out of 10 do you think say yes? 0? Maybe one dumbass? So I don't buy it for a second. I think that this is entirely driven by what we want to consume and what media is incentivized to do. We want negativity because we want to be outraged. So there was another, and I'll give you another example of this. Washington Post had a great article called When America Was Great According to Data. Now, the only thing I saw people tweeting, this is a wonderful article. There's a ton of meat in here to chew on that I
love the visuals. It was really well done.
So the only thing in here that went viral was this chart, and it said the headline was, "For haters, there's no time like the present." So almost every one of these, the line, and these lines go back to 1930s, almost every time it's at the highest point today. Okay, so these are the questions. Share who said each superlative best applied to a given decade. The most political division today. The least reliable news reporting today. The least moral society today. The worst economy today. The worst work-life balance today. The least happy families. And these aren't,
if people are listening to the podcast, not watching this on YouTube, the numbers are a drastic leap higher. Worst television too. That's the one that stood out to me. Television has been in a golden age for 10 years. These people are, there's no way this is true either.
So then there's another set of questions that asks not what the worst is, but what the best is. So how is it possible that we can have the worst work-life balance today, Ben, but then also simultaneously the best work-life balance? And then they ask another chart, that they ask another survey. Ben, you see this? What decade had?
Yes.
And it says The best work-life balance? Also today. How can you simultaneously have the best and the worst work-life balance at the same period of time? It doesn't make sense.
I think the internet has taught us that, like the psyops that you can do in social media and on the internet and the way people can be guided and herded.
Oh, dude, we're Play-Doh.
Yes, the companies and the people on the internet understand this so much better because so many of the things that go on in social media now, like someone will do an outrage, like satirical piece that is obviously they're trying to drum up outrage, and people will get outraged of it regardless of if they know this person's wink in on the joke. Like I almost assume every one of those kind of things is fake now.
It's all fake
these days.
So here's a quote from the article. When Americans were asked last year which decade they'd most want to live in, the most common answer was now. At some level, then, it seems unlikely that we truly believe this decade stinks by almost every measure. You think? So thank you, Washington Post, for doing this. This was a really eye-opening and teachable article. So when you see, but here's why it matters. Because public perception shapes everything. And if people perceive that everybody's miserable, we talk about it all the time, it has an impact on our collective psychology. And that's the danger.
That's the thing. The internet has broken collective psychology. I think I'm okay saying that like the experiment that is the internet, having us have all this information, sharing our thoughts and opinions at all times for a decent chunk of the population, it's just broken our heads.
All right, here's one more quote. So they say YouGov didn't just ask about the best music and the best economy. The pollsters also asked about the worst music and the worst economy, but almost without exception, if you ask an American when times were worse, the most common is responsibly right now. Again, hilarious. So this holds true even when now is clearly not the right answer. For example, when we ask which decade had the worst economy, the most common answer is today. Hello, have you heard of the Great Depression? Nobody actually believes this shit. It's just...
Or the 1970, yeah. The only one that really rang true to me here is, this was my favorite one, is nostalgia tends to peak when you are young. So they show the same questions and when was the best, and it's always when you are young. Because a couple weeks ago, I talked about how the 90s is the best decade to grow up in. And obviously that was tinged with nostalgia-colored glasses. And that's the thing for everyone, that the best TV and the best movies and the best music and all that stuff is when you were young.
Yeah, because guess what? When you're 12 years old, you have no problems. You got no worries, right?
Yes.
At least nothing.
I say that stuff to
significant.
my kids all the time. Like, what do you have to worry about right now? You have life so easy. You have literally nothing to care about. All you have to do is be a kid.
Yeah, it's
way easier then.
Yeah. So I'm not saying that being a kid is easy, because there's all sorts of social pressures and blah blah blah. But like, relatively speaking, it's a lot easier than supporting your family. That's for sure.
Yeah, but the biggest reason that you and I are anti-survey is because of this kind of stuff where you just can't trust the outcomes anymore of this data unless like they're really direct questions.
Yeah, and so the problem is, who's reading this article? How many people who saw that chart showing that everything is the worst today than ever, how many people read the article? Honestly, less than 1%?
Right. It was a very good article.
Less than 1%? Do you think that's crazy?
Probably. Yes, they shared the chart, so they looked at the headline.
So yeah, it's just not good. And this is the world we live in, and it's never going to be any different. And so we're going to keep banging this drum.
There was a clear dividing line when the internet happened. Before internet, that should be the new BCAD. Is before internet, after internet.
All right. Here's one more survey thing. The number of employees feeling financially well is trending up. Employees who rate their financial wellness as good or excellent. So it was 42% in 2023. It was 47% in 2024. This is another thing that clearly doesn't square with perception.
My favorite financial-based thing is, if you're a big financial company and you do a chart like this, you have to put a gray-haired smiling person next to it.
Oh yeah, got to.
Has to.
Those are the rules.
Number of 401k millionaires from Bloomberg. This is just at Fidelity, who is one of the biggest 401k providers in the country. I think the biggest. Is that fair? Are they bigger than Vanguard?
Yeah.
Okay. It's 500,000 millionaires almost in the first quarter. That's a new record. But that makes up only 2% of their 24 million defined contribution accounts. Still, if you can do $1 million in a 401k, that's impressive, because most people have a 401k here, an IRA there, an old 401k to an old employer. Most people don't have all of their money at a single 401k plan. And the millionaires had an average tenure of 26 years in the workplace retirement savings plan and an average contribution rate of 17%.
That's pretty good.
That is pretty good. People often ask, what should my savings rate be? 17% sounds like a good rate to me. I would take that for most people.
So again, that's just for the millionaires. So that's what it takes.
Yeah,
that and a lot of compounding, a lot of time.
All right. I feel like we haven't talked about flows in a while. You're a big flows guy.
It's been
Wall
a
Street
while.
Journal had a piece this week. Flows to U.S. stock and bond funds this year are the strongest since 2021 when interest rates were near zero. Globally, we've seen a net $468 billion invested in ETFs through April, which is a record. Now look at the flows here. This is flows to U.S. mutual fund and exchange traded funds. And we had a huge uptick in flows in 2021. Then we have the bear market in 2022. Nearly $500 billion goes out. We had a little bit of less money come out last year, and then now money's pouring back in this year. It's the people on the edges and the fringes, because there's trillions of dollars in these funds, right?
So Ben, in 2021, almost $850 billion flowed into U.S. mutual and exchange traded funds. That's more than the difference in market cap between Amazon and NVIDIA.
Does that make sense to you?
I'm just kidding.
All right. The Vanguard S&P 500 ETF is on pace for potentially a record year. $37 billion net in less than 5 months. The annual record for any ETF inflow is $50 billion. And if you look at the list of the biggest inflows, it's the Vanguard S&P and then SPY is next, which is interesting. The Vanguard S&P 500 is like taking over the throne, it looks like. But the next one, third biggest inflow is Bitcoin for my shares at $15 billion.
Wow. Two things on this. I'm a bit surprised that VOO, which is the S&P, Vanguard's S&P fund, has taken in more money than VTI, triple the amount.
That is kind of interesting.
I feel like historically VTI has been more popular, but I could be wrong on that. The other thing is that for this to potentially set a record in a year where cash is still yielding a very healthy 5%, I would not have predicted that.
And they showed in this article that we're still well over $6 trillion in money market funds. So that has not abated at all.
So people are putting money on their credit cards to buy VOO. Interesting.
I guess this is just a thing where the pie keeps getting bigger, so we should expect these things to... I mean, if you think about it, the savings rate thing, if your savings rate stayed the same, and we never look at anything in the stock market on an inflation-adjusted basis, right? Which is, someone asked me last week, why do we look at GDP on a real basis, but things like the stock market and earnings are never on an inflation-adjusted basis? I don't know, because we've always done it like that. But if people are making 20 to 25% more in terms of wages, because inflation has raised those wages, that means more savings. You should expect these numbers to go up, is what I'm saying. It makes sense.
Let me ask you a question about the credit card thing. So I don't know if you saw my post yesterday, but I pulled a chart from the Federal Reserve Bank of St. Louis showing the percentage of people with delinquent credit card debt continues to rise. This is, I can't hand wave this away. This is not great. So whether it's people that are going into delinquency, where it's turning into 30 days or 30 days plus or 90 days plus, they all look the same and they're all not good. So for the US, it looks like just over 10% of people have delinquent credit card debt, which is the highest it's been since, what does it look like 06, 07, something like that. And if you look at the poorest 10% of zip codes, it's way higher. It's like 17 or 18%.
I guess my only way to square this is that, yes, it's whatever, 2% higher than it was a year ago, like going from 8% to 10%. But that number is being dwarfed by the people who are still spending more than those people. If that makes sense.
Yeah,
I agree that that's not a great trend.
Yeah, no, it's going the wrong direction.
But I think the reason that it hasn't impacted the economy is because, again, the people on the higher end that aren't going into credit card debt are still spending.
Do you think that in 6 months, I don't want to use the word reckoning, are we going to hear more from this chart in 6 months? Is there going to be so when I see this chart, I, rightly or wrongly, I look at the stock market. I say, okay, what are some of the biggest lenders that are exposed to the consumer doing? What's Ally doing, right? And they're big in the auto, and the auto space, auto credit's not doing great. And I look at the chart.
Think about I don't have the number of people who pay the minimum payment on their credit card. If credit card rates went from 20% to 25% or whatever they've done, and you're making the minimum payment, that doesn't seem like that much. That's a lot.
Yeah.
The compounding against you, so I can see how those delinquencies would add up in a hurry.
So
You're
Ally
I'm
stock is
literally
doing
never
fine.
getting out of this.
Capital One stock is doing fine. Now you could say, "Hey, dumbass, what do you think this? What were the charts of the banks doing in 2006, 2007? Right? I'm sure they looked fine then too. Now, all right,
So you're building a basket of consumer shorts here.
Well, so the stock market isn't always right, but I don't know. I feel like if this was really a stress, I would not be the first one to point it out, and the lenders would probably be doing less good than they are. So anyway, something to keep an eye on. Definitely not something you want to see.
All right, something else people were dunking on social media, but I think is actually a fair point. Felix Salmon at Axios wrote this piece called "Inflation Doesn't Mean What It Used to," and he wrote, "The meaning of the word inflation has changed. It used to mean rising prices. Now it means high prices." And everyone on Twitter was like, "No," and some of their community noted it and all this stuff.
I sort of agree with that.
And I kind of I don't necessarily agree with it because it's like semantics a little bit. Rising prices, higher prices. But I think this is the kind of thing that the way a lot of people think about it. Because I had a conversation with a friend this weekend. We were talking about like home renovations. And he was like, I looked into stuff and he said just everything is so much more expensive.
Mm-hmm.
And people, when they think about inflation, they do think of just high prices being higher relative to the past, which again seems like splitting hairs because of course prices are almost always going up. Inflation is always going to be higher than it was in the past, but it's just the leap forward that we've made.
Well, here's why he's right. If prices didn't go up from today through next Memorial Day, do you think that people would say, "Oh, wow, everything's so cheap because inflation is zero"? No. They would say things are still really expensive.
But
things
the
still
weird thing
feel
is,
expensive.
after like the 1970s and the early 80s, we obviously never circled back. And so it's interesting that people eventually just get used to it. Like that'll happen if inflation did slow and it just was at 2 or 3% for the next 5 years or so. Some people would still complain, but eventually everyone would just kind of move on and get used to it. And this is the new level that people are used to.
Yeah, but I think the eventually is longer than you might think. I think the eventually is like 3-4 years.
Yeah, that makes sense to me actually. And I wonder when it was after the 70s. Because the 70s, inflation was 7% a year for like 12 years. It was way, way longer than we've experienced it.
Yeah, that's a good point.
Like I wonder how long it
What
took
a
people to
nightmare.
get. But think about it though. In the 80s, it's looked at back as this like greedy decade and people were making money and spending money. It's like the news cycle happened and people kind of, that it was always in the back of people's minds, but people did move on.
This decade is nothing like that decade. I mean, needless to say. Think about, well, first of all, the stock market's at an all-time high. The economy is booming. If you want a job, you can have a job. Not only was it a deep bear market, the worst recession since the Great Depression, and double-digit inflation for years. So do not even
Yes,
utter
the
the
70s was
1970s. Come on.
Yes, unemployment rate was way higher for much of that decade. Yeah, you're right. This is not that.
And they had no Netflix on top of it all. What did they even do?
No skip intro button. You had like 3 stations on TV.
All right. Here's something that doesn't happen in anything outside of a booming economy. On Thursday, May 23rd, TSA officers screened exactly 111,000 passengers, employees, and crew through security checkpoints yesterday. So the Atlanta airport is the busiest airport in the United States, and it shattered the previous record. So there you have
Travel
it.
boom is still here.
What's that?
Travel boom is still here. Atlanta is one of the best big airports that there is.
I've never been there.
Okay, I fly through there all the time because I do Delta. So anytime if we would go south anywhere, we'd fly through Atlanta. My brother used to live there.
We're taking a flight next week. Ben and I are going to Charleston.
That's right. Live Animal Spirits, talk your book.
There we go.
Okay, what's going on in crypto now?
Okay. So there's something strange happening in the crypto universe, which I guess is more or less always the case.
Par for the course.
Caitlyn Jenner appears to be shilling crypto coins, which I'm not a lawyer, but I feel like that's not legal.
I feel like you couldn't really, if you put a name of any sort of B C-list celebrity and said they're shilling a crypto coin, like it wouldn't surprise me anymore.
So there's videos of her saying like, get involved. And people are asking like, this really can't actually be real. And there's speculation of, is she hacked? Is this like AI and a fake AI thing, which would be, kind of wild and also kind of not too surprising. So I don't know exactly what's happening, but if this is real, what in the world is going on? Somebody tweeted, wait, Caitlyn Jenner is related to the Kardashians, right? Aren't they like ultra rich? Why shilling dog shit's token on the timeline? Somebody replied, because Chris and the kids are the ones with all the money. And Caitlyn Jenner's account, I should say, replied, exactly, LOL. What?
The funny thing is that getting back to the nostalgia, in the 90s, like no one could sell out to do anything. And now it's not only can people sell, we've gone past the people can sell out, but it's like people can just shill, and that's okay too. It's not just selling out anymore. It's, I don't care. I'll take money from anyone, anywhere, anyhow. That's where we are. I mean, I don't know. You can't like paint broad brush over crypto, but it would be nice if they could, if somehow this stuff could get shut down a little quicker, if it was possible.
Yeah, if this is real, I feel like we're going to hear from the authorities, but we'll see.
All right. I still have a subscription to the Detroit Free Press from when I lived there. I like to keep up with.
Is that physical?
No, this is one of those ones where every 6 months when my subscription comes up, they're going to raise a price on me. They call me and say, "Hey, time to re-up," and I say no, and they say, "Okay, we'll give you a lower price."
Hey,
just like my cable bill.
Who's your newspaper broker?
Myself. I don't need a broker. All right, so this is just a story about the Detroit property market, and they're talking about there's still multiple offer sales going up, and they talk about prices are way lower there than just about anywhere else. They've doubled. They're still low. So they said, for example, the 3-bedroom ranch in Garden City hit the market for $130, quickly sold for $180 after multiple offers. There was a $500,000 one in Dearborn Heights that was sold in February 2023 and sold again last month for $700,000. And they're interviewing all these realtors, just same thing. Like, anytime a house hits the market, and they're going up and down the scale here of prices, that they're getting multiple offers still. And this has to be the worst part about being a person who's trying to buy a house now, is that not only did we not get lower mortgage rates, like that was the thing, is like, okay, just wait a little bit, we're going to get lower mortgage rates. That'll make things easier. But there's not any supply, and prices are only going up when you bid. So, and obviously this isn't the same thing everywhere. I'm just using this anecdotally, but there's still places like this where if it's in a relatively desirable area, you're still getting multiple bids and you're having to pay the higher mortgage rates with it. It's just like a double whammy against you that we never got any relief here for anyone buying a house.
Yeah. Is this going to assume that rates don't come down? Let's just make believe that rates stay flat for 5 years and people don't get the opportunity to refi. Are there going to be ramifications from this? Is it going to lead to lower spending from this cohort?
Well, here's the alternative though. Young people are making more money. If they're not buying a house, they're going to be spending it on something else. So what if they're boxed out of the housing market? Let's say you're making more money than you ever thought was possible at a young age, but you can't compete with people who already have equity or who have a low mortgage rate locked in or who have a higher income than you or a boomer who has a house paid off. Then you can spend on other stuff. Maybe this is why part of the reason there's a travel boom. It's like, geez, I can't pay for it. I'm never going to be able to afford a down payment on this house. I'm never going to be able to afford the monthly costs. I make some decent money. I'm going to spend it on something else.
Has homeownership peaked?
No. You think so? Like, you think the home ownership rate is going to go down?
If mortgage rates stay in the 7% range, is homeownership going to go from 65% down to 60%? I think that's reasonable.
What scenario?
It's too expensive.
What kind of economic scenario? See, this is the thing in terms of like economic surprises that we just get used to stuff. If you would have told me this 2 years ago, mortgage rates are still going to be at 7% in 2 years, I would have said, you're nuts. There's no way. We can't have that. It would be impossible. And everything is still fine. I think the biggest ramification would be we're not going to build enough housing because home builders are going to pull back. People are going to pull back on building. It's going to make the supply situation worse. But what economic environment would we have to be in for rates to stay at 7%? The economy would have to continue to grow very strong, right?
Mm-hmm.
In that scenario? I don't know. Never say never, I guess. By the way, I'm seeing lately too. I just read an article today saying like, listen, the pre-pandemic interest rate period is over forever, and I just wish people would hit the brakes a little bit before they say forever, because people said interest rates are never going to rise this high again forever. So anyway, I just caution people to tap the brakes a little bit when we're doing the forever thing. There are certainly scenarios where we could get back to 3% mortgage rates. It wouldn't shock me.
No, I think but the zero era, you think we'll ever see that again? Zero for 10 years?
You don't think we're going to, 10 years. You don't think we're going to have a financial crisis someday? At some
Probably.
point where,
Yeah.
and rates are going to, I don't know. That wouldn't surprise me. Ron Lieber at the New York Times had a good piece about home equity and talking about how it's like a first world problem. Oh no, I have too much home equity, and my house is up, but I can't do anything with it. And he kind of goes through the different ways that you can tap your equity. You can sell it, but then you have the age-old problem of you have to live somewhere. So what are you going to do now? Buy a higher price house? You can cash out refi, which was a way better looking proposition a few years ago when rates were lower. HELOC, also my HELOC, I checked the rate the other day, is at 8.3%. Those are variable. Reverse mortgage, which he said sounds great in theory for people who are, I think it's like 62 and older can do it, but they don't allow many of them and not many people do it. And then he said, there's those other kind of companies that are looking to sell the upside. We talked to a couple of those companies back in the day. That I just, as a business model, doesn't make a lot of sense to me. So my question is like, are we going to see some, in your situation, if rates stay higher and make this harder to get people to pull that trillions of dollars they have in equity, will we see some creativity here finally in like making it easier to tap that equity, in understanding that people have so much money in their house and it's just like pent up spending just sitting there? Why haven't we seen more creativity here? Or will we?
I don't even know enough about this to like say anything. I just don't know. I'm sure there's regulation and interested parties.
There's just so much wealth sitting there in houses that people would spend if they maybe back to your forced savings at the beginning. Maybe it's a good thing that people can't tap it because they would just spend it and go to Hawaii all the time, or I don't know.
I went to Home Depot last week to do some gardening. And I bought a tiller. I don't know, Ben, you're probably not a farmer, so you might not know what that is. It's the machine that rips up the dirt.
Wait, you bought a tiller for like your
I
5
rented
by
one.
5 garden?
I rented one.
Okay.
I rented one. $50. They said,
Did you know how to use it?
oh yeah, I till.
No offense to you. I wouldn't know how to use it.
Yeah, no, I know how to use it. Not my first rodeo. So they asked me if I want insurance for $10 now. How much? No. I broke the wheel.
How?
Honestly, I don't know. I didn't even wheel it. That's the thing. I carried it to my trunk and I carried it from my trunk to my backyard. So I didn't even wheel it. So I don't know, but the wheel, I don't know if the wheel broke when I picked it up or put it down, but
so how much do you have to pay?
I think they let me go. I think they were like, just get out of here. I'm like, you can't just bang it back in. Anyway, my point was that this Home Depot, and obviously this is seasonal, but holy cow, is it busy.
Busy?
Oh my goodness.
I can see that. I was never a fan of that place because I feel like I'm just constantly chasing around people in orange aprons and waiting in line while someone else talks to them. Because I could never find, I know there's an app you can use now, but it was never good for me. All right. Wall Street Journal, the Home Alone house is back on the market after 12 years. This is just, Home Alone is it the most economically dissected movie in history?
Ooh. I would have to think about that. Why do you say that? Because of the house and the pizza?
Every year, people talk about the cost of the pizza. How much did Mr. McAllister actually earn? What kind of job did he have? So the couple bought it for $1.6 million in Chicago area in 2012. They're selling it for $5.25 million. Listen to this. So originally built in the 1920s, 5-bedroom house is 5,700 square feet. I looked at this thing. This is even bigger than it looked in the movie. They have an indoor basketball court in this house.
What?
A movie theater. This thing is massive.
Let me check this out.
Scroll down a little bit on the story. There's literally an indoor half basketball court. This house was massive.
So I mostly am of the mindset that a bigger house is more of a liability than an asset, right?
The upkeep, right?
Yeah, and like all the stuff that we're oohing and ahhing eventually loses its cool, and you know how luxuries turn into not necessities, but norm. Luxuries become the norm. I don't know, man. Having a movie theater in your house and a basketball hoop, that sounds pretty awesome.
Yes.
Right?
But you wouldn't be able to give up going to the movie theater by yourself, though.
If I had that movie theater in my house, I'd go to the movie theater every night.
Okay. Would you take the Home Alone house with people constantly coming to take a picture in front of the house, though? That's the part that would annoy me.
I wonder if there's is there a Home Alone premium or a discount? Because to your point, it must be kind of annoying.
Yeah. Kind of like somehow people say if you have a pool at your house, it actually detracts the value of the home. Yeah, I wouldn't want people constantly.
But I feel like this
screaming.
house is so. Oh wow, there are a lot of people in front of it. Never mind. I wouldn't want to live there.
Constantly.
All right, back to the consumer. I was listening to both Walmart and Target's earnings call to hear what they were saying about the consumer, and they were saying the same thing: resilient, uh, uh, consistent. Yeah, consistent. I think was the word that they used. All right, here's Walmart talking about inflation. These are not inflation-driven results. In the U.S., like-for-like sales inflation was about 40 basis points for the quarter, including mid to single-digit deflation in general merchandise and low single-digit inflation in food and consumables. Together with our suppliers, we're making progress lowering prices. Our rollback count is up, and customers are responding to our price leadership.
So they're saying you can't just say that our results of higher sales are because of higher inflation. The prices are going down, but the results are still going up. Is that what they're saying?
Yes, and I think there was a quote about inflation being half of what it was last quarter or this time last year. At my beach club, noodles for the boys, like a kid's meal, I think it was $7, and it definitely wasn't $7 last year. So prices are coming down big time there.
That's New York inflation, because for us it's still like $3 for kids stuff.
$3?
$3. We're
All
talking.
right.
They give them Kraft mac and cheese,
Yeah.
but what else do the kids expect?
Here's another quote. This is a great read through to the overall economy. I think the analyst question was like, is this as good as it gets? Something like that. And they said, while it might be a little much to expect every quarter to be this good, we feel really good about the performance, and it demonstrates how this business can perform when we're firing on all cylinders. Consumer economic conditions have been relatively consistent since the start of the year. Many of the value-seeking behaviors we witnessed last year have continued, particularly around seasonal events. Okay, whatever. You don't say that outside of a booming economy. Booming might be strong. Whatever. Call it what you want. A very healthy and strong economy.
Everyone thought we were going into recession in 2022. What if we really don't get one until 2027, 2028? It's certainly
Then
possible.
rates will stay higher for longer.
Could be. Yeah, but what if we get back into a situation where inflation is back at 2.5%, 3%, and the Fed lowers rates to 4% or something? That's a pretty good place if it could happen.
Yep. All right. One more survey that I think is actually useful. This is from the Federal Reserve, the economic well-being of U.S. households. So they show the assessment of your own financial well-being versus the local economy and the national economy. And this is pretty remarkably consistent and is always the case. So everybody says, not everybody, 73% of the respondents say that their own finances are doing okay. If you look out to the local economy, it goes from 72 down to 42% in terms of people saying that things are okay. And then the national economy down to 22%. So that's always what it is. Morgan's running on this a lot. I think Derek Thompson's running on this. I'm doing good. My community's doing okay, not as good as I am. And the rest of the country is going to hell.
I had a conversation with a person about this weekend, an old friend, who said they were talking to a coworker who was saying like the economy is crap right now. And he told her, you are literally making the most money you've ever made in your life. Your business is booming. Do you really think that it's not like that for other people and it's just you? But I think that is the way people look at it these days. And this is another internet has broken our brains thing.
Yeah, you know what? When if you were to say that to somebody, I don't think they would say, yes, that's how I feel. I think they would sort of like, they would like hand wave it away. You know what I mean?
Yes.
Like because it like breaks their brain a little bit because they know it's a ridiculous premise that I'm doing okay, everyone else is doing terrible. I'm thriving despite the economy struggling. Like, no, you're not, jackass.
I do think that like the social media stuff is a piece of just constantly looking at other people. I saw an old friend from high school this week for the first time in a while, and he's always been one of like the most even-keeled people that I know. And some of the traits that this guy has are I kind of am jealous in a way, but he has the ability to not be envious of other people's stuff or not be impressed by what other people are doing. It just like it just totally bounces off of him. And I feel like most people don't have that ability to just look at what other people are doing and not be somehow jealous or like, because it's like, yeah, I'm doing great, but this person is doing way better than me. So why am I not like them?
Yeah.
And I feel like that that trait in people is really hard to find. Someone who can just be like, I don't know, I don't really care how much money you're making or what toys you're buying, or I feel like way too many people are consumed by that stuff.
Yeah, I think it's normal. Like on the way to the beach yesterday, I saw some guy driving a really nice Porsche, and I thought,
oh, back to your car stuff.
I thought, yeah, I would love to have that. Like it's an awesome looking car. It looks really cool. Now, I wasn't like, oh my God, that guy's so cool. Like I wasn't thinking about him at all. But like, yeah, I would love to drive that car.
And things are just a little more ostentatious today. So I rewatched for some reason this weekend. It was on Amazon Prime. I kind of had it in the background when I was doing some stuff. You've seen 16 Candles before? Like one of the all-time great
I never heard
1980s
of it.
movies. 16 Candles?
One of the all-time what movies?
One of the all-time great teen, John Hughes. It's, Molly Ringwald,
is this 80s?
Anthony Michael Hall. Yeah, early
Okay,
80s.
hold on. Before you get to that, in the survey about what decade had the best movies, they said the 80s. I'm sorry.
It's obviously the 90s.
They probably pulled mostly Gen Xers because it is definitely the 90s. There's a handle on Instagram called The Greatest Scenes of All Time. And they put on Instagram, in October of 1994, Pulp Fiction, Forrest Gump, Shawshank, Lion King, and Jurassic Park were all in the theaters at the same time.
Jeez.
The 90s were clearly the best decade for movies.
And it's never going to be top again. But the funny thing is about things being more over the top these days. The movie is about the jock and the girl who's less popular, that has been done a million times. But the 80s kind of was the first one to do this stuff. So they had a party at the jock's house, Jake. And his parents just you always talk about like these normal houses that are around you that are going for so much money. It was just this normal house. But his dad was a rich guy and he drove a Rolls Royce. But it was this regular, normal, like split level house.
It is weird when you see that. Yeah, I see that. You do see that.
Yeah.
People who drive a Maserati and live in a very, very standard house. It's like, it's just weird. Speaking of cars, I made a mistake. And I think I could put this car issue to bed, at least for the next 3 weeks. I won't talk about it. The check engine light came on again for my wife's car. After being told that they took care of it. They got to the root of the issue. Guess what? Spoiler, they didn't get to the root of the issue. The light came on again. I said, that's it. We're getting a new car. I can't take with the bullshit anymore. So I still owe $31,000 on the car. And rookie mistake, this is a PSA. I went to Kelly Blue Book and maybe CarMax, and I put in my VIN, my this, my that, to get a quote. And now my phone won't stop ringing.
Oh,
so
want to buy it from you?
So the bad news is I owe $31,000.
No, here's a play them off against each other.
No, dude, the gap is too big. I owe 31. It's worth 16.
So that gap is not getting filled.
That gap good one. That gap will never get filled. I am driving this car straight into the dirt. But now my phone won't stop ringing. I'm getting text messages from all sorts of dealerships.
So Kobe turns 16 in 8 years or whatever, and he's getting this car.
Yeah. So stay away from car quotes. Okay. Ben, I was explaining to somebody who English as a second language about I got a traffic violation like a year ago that I never took care of. It was the babysitter drove past a bus that was pulled over. Now, obviously, for obvious reasons, they want to protect the kids. I want to protect the kids. If a school bus is pulled over with its stop sign out, you can't go past it.
Right.
Well, they have, there was a video, right? So you could check it. So I'm looking at the video. The bus is pulled over on the side of a main road, lights off, and just traffic is just driving by. So all those people got flagged. And I never took care of it. I got a second notice and I called them and I'm like, they're like, sir, it's been over a year. We can't do anything. If you want to dispute this, talk to a lawyer. I'm like, I'm not talking to a lawyer about, for $250. So I'm talking to somebody.
Surprised you don't just have a lawyer on retainer for this stuff because another broker for you.
I don't have a lawyer. I do not have a lawyer. I stay far away from the law. I play within the rules. So I'm talking to somebody about this and she said so I'm like, wait, actually, maybe I should hire a lawyer because I don't want points. And she's like, wait, points are bad? I'm not understanding. Why are points? And she made a great point. Whose idea was it to call the bad things points? Like the insurance company is like gaslighting us into thinking that these are actually a good thing. Like you want more points? No, they should be called like I don't know what they should be called, but points is an interesting choice of words.
Some sort of red flag. Yeah, that's a good point.
One random observation for you this week, Ben. Why do old men love giant belt buckles?
I thought it was just guys in the South. No?
Listen, I saw 2 people over the weekend, but that's 2. It's
Big
more than
oval
one.
ones?
Just big, like a big silver, like a loop design thing.
I've never been a cowboy, so I wouldn't know this, but wouldn't it be uncomfortable when you sit down? Wouldn't it like just dig into your
You
stomach?
You would think.
Yeah.
Remember the popular belt back in the day? It was like braided.
That was a 90s thing, the braided belt.
That was a big
Oh, yeah.
90s thing.
And then the front, you'd get a little long, so the front end would hang down a little bit.
Yes. And the great thing about the braided belt is there was no loop, so you could just.
That's true. Anywhere you wanted, but it would fray eventually.
It was very
Yeah,
flexible. You lost weight, you gained weight.
That's true. I think a couple weeks ago I asked, like, why don't we ever hear about how many people are moving and where they're moving to and all this stuff? Jay Parsons did a piece on this, and he looked at the data from people 20 to 34, from 2020 to 2023 in the pandemic. Like, where did people move? And he did a chart on this. And by far the biggest one was Dallas-Fort Worth, added 123,000 young people, which he's nearly matches the next place finishers of Houston and Phoenix. So you look at the chart here. So Austin is up there, which makes sense. And then some of these other places.
Where's the Villages?
Oh, yeah, that's a good question. Is that in Florida somewhere, maybe? Looks like a lot of Florida places. But clearly it's all people going to the South. And there are young people moving away from Los Angeles and New York, which kind of makes sense, Chicago, San Francisco. But it's young people moving to the South. So there are hundreds of thousands of people who are picking up and moving to the South for weather or jobs or whatever.
Makes sense.
All right, let's do some recommendations. I have heard, it's funny, whenever we get emails from people now about movies, it'll be like, I'm a total Michael person for movies, or I'm a total Ben person for like. There's 2 camps now.
Yeah,
which is fine. To each their own. Everyone has their own preferences. For the past few months, a bunch of people have said you have to watch Snack Shack. This is a total Ben movie.
Never heard of it.
I had never really heard of it either. So it's one of those movies. There's no really actors. You know, one of the kids from the original Jurassic World reboot was in it.
Okay,
as a little older kid, but more or less people even. It's the star of the movie or the second. It's 2 bros, and it's a nostalgia. This hits everything.
Let me read the description. This is a total Ben movie. Dreaming of striking it rich, inseparable best friends AJ and Moose seize the opportunity to run the local pool's rundown snack shack. However, things take an unexpected turn when they meet Brooke, an effortlessly cool lifeguard who puts their big summer plans and friendship at risk. Yep, that's got Ben Carlson written all over it.
TLDR, I loved this movie. This is one of my favorite movies I've seen in a long time. Here's what it had. It was took place in 1991. And so first of all, I got the 90s nostalgia. It was a party movie. It was a summer movie. It was a coming of age movie. It was also 2 friends. It kind of reminded me of the friendship, reminded me a little bit of Seth and Evan in Superbad.
Mm-hmm.
It wasn't that funny, but the kid who played Moose, who's like the bro of the tandem, it's just these 2 kids who are kind of always hustling to make more money, and they like make beer in their parents' house. He played young Steven Spielberg in The Fabelmans, which I didn't make it very far in, but this kid was so good, and apparently he's going to play Lorne Michael in a movie. But this has the Ben stamp of approval. This was the most fun I've had at watching a movie in a long time.
Okay, can I watch it?
I don't know. Give it a try. I think you actually might like this because it's kind of raunchy too. Not raunchy, but like vulgar.
I do like the premise.
It's just a very simple premise. It's just these 2 bros who are constantly hustling, trying to make money. All right, my wife and I watched Dune 2. I waited till it hit HBO Max. I'm not gonna lie, I was a little disappointed. Now
shame on you. You should have gone to the theater.
So it's a visually stunning movie. I'm sure there was a premium by seeing it in the theater, but here's the problem. I didn't see Dune 1 in the theater either, and I really liked Dune 1. I thought the first one was just better than the second one. No. So here's what I liked about it. Austin Butler I thought was great as the bad guy. I think here's 2 reasons I was a little underwhelmed. I still liked it.
Reason number 1, because your expectations were too high because people like me.
Yeah, but I liked it. I didn't love it. So I'm just saying I've seen the first one 2 or 3 times. I really liked the first one. I thought it was better. Here's some of the reasons I didn't think I like it. First of all, the plot is very disjointed. Like a lot of it just...
Really?
I thought it was very disjointed and kind of like, what's going on here? And just in like a Game of Thrones kind of way. And number 2, I think I like Timothée Chalamet more as like the up and coming guy as opposed to the guy, because I don't know. I'm not going to Lisan Al Gaib or whatever you say in Messiah all the time to like some hipster from Brooklyn. I don't trust him as like being the guy. Is that fair?
Well, it's
Like
your opinion. Listen, again, I perhaps would have had a similar. You had to see this in the theater. I mean, that's just
again, it was a visually stunning movie. Like when they floated up and down on stuff, like that was amazing. It looked cool.
So I saw this on the IMAX screen, and when the lights came on, I said that was one of the best experiences I've ever had at the theater.
Yeah, I remember you saying that. Now maybe my expectations too. I liked the first one better. That's all. That's where I land.
Okay, I think that's that is a contrarian take for sure.
I'm probably in the minority, but my wife and I both afterwards were both like, wait, what? I was just a little bit of a letdown.
Okay, well, this is why there's Michael people and Ben people. What else? This
is true. Ask the Compound this week. We have Money with Katie on. She's amazing. She's at Morning Brew now, and very refreshing takes from a young person on the money. So I highly recommend.
You have her on ATC this Thursday?
Yes, this Thursday.
Okay. All right. I watched Equalizers 1, 2, and 3 last week.
I've seen the first two.
Great movies.
I didn't feel the need to watch the third.
Yeah, I mean, I actually thought the third was the least good of the trio, but I can't wait for the fourth. Like that is a couch movie. Like, I'm sure it's fine in theaters too, but you could just watch it at home and just do just fine.
Yeah, you don't need to pay attention that much either.
No, not at all. A lot of fun. All right, that is it for me. Oh, we had a really good Talk Your Book this past Monday talking about venture-backed debt and all sorts of interesting private credit. I thought that was a really, really fun episode, so check that one out. Animal Spirits at the Compound News. Hope everybody's enjoying the warm weather. Have a great rest of your week, and we'll see you next time.